Microlise Group provides transport management software to fleet operators, helping them to improve efficiency, safety, and reduce emissions. The company was established in 1982. It listed on AIM in July 2021 when it raised over £61 million. I'm delighted to be joined by the Chief Executive, Nadeem Raza, and Chief Financial Officer, Bill Wynn. So, Nadeem, you love this company so much that you led the management buyout in 2008. So what is it about Microlise? What does it do?
So firstly, Sarah, thanks for having us on. So as you mentioned, Microlise provides transport solutions for companies with large fleets of vehicles. And of course, as well as that, we have a secondary customer base, which is OEMs who actually manufacture those vehicles. And what we do is we help them run their operations. If you can imagine somebody like Tesco, who have thousands of supermarkets, lots of warehouses, and they have to transport those goods from the warehouse to the supermarket, and then they have to transport those goods, particularly for home delivery, from those supermarkets through to your doorstep. And when you have thousands of vehicles, tens of thousands of drivers, that's a big operation that you need to manage and make sure that you're working it very, very efficiently. And our software and technology helps companies like Tesco do that. And then the secondary market, in terms of OEMs, they use our technology in vehicles to understand how their vehicles are operating in real life compared to how they actually design them to operate. What are customers really doing with those vehicles? And we have customers in that space like MAN Trucks in Germany, Tata Motors in India, and slightly off-road, JCB, who obviously produce construction equipment. And through our OEMs and through our direct customers, we operate literally in every single country in the world, apart from North Korea. We have assets that we monitor even in Antarctica. Yeah. So we are very much a global business, although a lot of our revenue still comes from the UK and Europe. And part of our growth story is that international expansion as we get more and more of our revenue from other international markets.
So you're truly global. You've mentioned Tesco and JCB there. So you've got quite a big portfolio of big names, but how many customers do you have, and do they love the company as much as you do? Do they stick around with you for a long time?
Yeah, actually, we have a really, really low churn rate. So when customers buy into our products and our services, they tend to stick with us for a very long time. We have customers who've been with us for 20, 25 years. Essentially, we're providing an ongoing service to them in terms of helping them manage those operations. And as they grow, we provide more and more software and more solutions to help them continue to grow and also acquire other business. So we have about nearly 500 enterprise customers. So those are large companies with fleets over sort of 500 vehicles. But we also have a lot of smaller customers, obviously through our OEM relationships. They supply their vehicles to customers that only have 5 or 10 vehicles. So literally we have thousands and thousands of customers. But in that top end, large enterprise space, particularly in the UK, we're really dominant. In that space of fleets of over 500 vehicles, we have nearly 60% market share. And particularly in retail, if you consider the retailers, people like Tesco, Sainsbury's, Morrisons, etc., all of those household names, we have a 90% market share. So in the UK, we have a huge, really supportive customer base, and it's continuing to still grow even with that large market share.
So the company was started, I understand, in 1982. But Bill, you were pretty successful very successful as a private company. I always wonder why a company wants to list on AIM, and you did so. The timing was July 2021. So why come to market? I'm guessing international expansion, but why come to market and why then?
Absolutely. Good morning, Sarah. We've been discussing about the options for the business going forward for a couple of years. and we saw an IPO as being the ideal opportunity for us. July last year was important because one of the main reasons we went to market was to have access to capital to take the business forward, as you say, internationally, develop more products. We are very cash generative, but we saw a real key opportunity for M&A. I have a background in doing lots of those kind of deals in the private equity market. So I really did want to have that access to capital because we saw with the pandemic, a bit of management fatigue through the pandemic, a lot of consolidation, particularly in international markets. And we saw an opportunity there that we could see where companies might be available that would otherwise not be. We'd made a small acquisition, which was the first for Microlise, in March of that year. So we wanted to complete an acquisition so we could, whilst I've done a lot of M&A, us as a management team hadn't done anything historically. So we wanted to be able to demonstrate to the market our credentials of being able to successfully integrate a business, which we had done despite lockdown and everything during the time. So perfect timing. So that had gone really well. And, you know, we raised, as you say, the money that we did, 18.4 million of that was new money coming into the business. So net of all the costs and the cash generative nature of the business, that gave us quite a war chest to enable us to look at opportunities, and we continue to do so despite the pandemic and obviously the challenges that brings to get face to face with management teams, etc. We are progressing a number of discussions, so fingers crossed. I hope that'll bear fruit shortly.
So, Bill, are you known as Bill Buy and Build now? Is that is this how we define the company?
Yeah, definitely. Yeah, buy and build is definitely where I see my strengths in helping to do that.
Very good. Well, in terms of the board strengths, Nadeem, you are recruiting. So I understand that there's a new non-executive director coming on board, gosh, in a couple of days' time. So tell me what this new recruit brings to the board in terms of qualities.
So Lucy Sharma Monday is joining us as of the 1st of February. And really, we met Lucy a while ago, and we were really excited about having her on our board. She brings a lot of experience from working on other listed businesses, and her background in terms of her experience with KPMG, etc., really makes her an excellent choice for running our audit committee. So again, you know, it probably hasn't gone no notice that she's a woman, and obviously we have a predominantly male board, and I think it's really good to have diversity in teams, and you know, we're looking forward to working with her over the coming months and years.
Now, the only thing about being a listed company is RNSs, and then you're at the mercy of interpretation. So your most recent RNS was very upbeat, but unfortunately shareholders seem to latch on to the fact that there was some supply chain issues. But this isn't just exclusive to your company. So, I mean, how are you addressing supply chain issues, and how big a deal is it to Microlise?
I think you know, we have to take responsibility for perhaps not getting our message across clearly in that RNS. It's important to note that this is not a demand problem. We have lots and lots of demand. You know, our OEM order book is full throughout 2022 and into 2023. So lots of demand from our OEM customers, and our direct customers, again, are placing orders higher and beyond what we were expecting in 2021. So this is not a demand issue, this is a supply issue. And really, those chip shortages and other supply chain factors are slowing us down in terms of our delivery to our customers. And we've been quite cautious in our forecast for 2023, 2022 and 2023, in terms of we don't really know how long those supply chain issues are gonna last. the industry view and the consensus we're getting is that those are going to last all throughout this year and probably into the beginning of next year. And hence, we've been quite conservative and cautious in the forecast that we've been talking about. If, however, those issues diminish much earlier, then we will certainly beat our forecast by some way, because, as I said, this is not a demand issue. There is lots and lots of demand out there and lots of people wanting to buy our technology and our services. We just have a problem supplying it.
So, Bill, there's organic growth and there is the growth that comes with the acquisitions. Targets, have you set yourself targets in terms of how many acquisitions you'd like to make, or is it buy, integrate, let's see, keep searching? I'm thinking about the criteria of potential acquisition targets.
Absolutely. We've a strategy for M&A. We look at opportunities that tick a number of boxes. One is essentially technology bolt-on. So we're looking for essentially software products that extend our footprint within organizations, and increases that cradle to grave. So in the whole transport system methodology. So we're looking at opportunities for those. International, as you mentioned, is certainly a priority. So we're looking for opportunities that help support our teams in France and Australia, where we have subsidiaries. Currently, we have one in India as well, but it's less of a trading sales subsidiary, whereas in France and Australia are. So we're looking to support those with acquisitions. Our criteria is that we don't really want to buy a version of ourselves, because that sounds quite arrogant. But a lot of, if you break down kind of M&A, so much is for the customers, so much is for the underlying technology in a software business. Well, we've got the technology, so we don't need that. So we're looking essentially for those technology bolt-ons, but internationally, we will buy a version of ourselves if it accelerates and acts as a catalyst in those markets.
It's okay to have a touch of arrogance as long as it's realistic. So Nadeem, finally, you do have shareholders. Obviously, you're looking forward to welcoming new shareholders onto the register. So in terms of shareholder value, how do you intend to create it in 2022?
Well, we are continuing to grow as a business, so both top line and bottom line growth. We also have a number of programs in place to increase our margins, and so those are happening throughout 2021 and will continue into 2022. And again, we foresee that actually our margins should be better over the coming years. And I think that the business overall is, as Bill mentioned, is quite cash generative, and at some point in the future, we aim to actually do some dividends as well. Not in the short term, because we're very much focusing on acquisitions and growing, accelerating our growth in that way. But I think there are a number of those options available to us to continue to enhance shareholder value. And I think it's also great that our institutional investors have been very supportive. They understand the issues that play out in the market. And I've had a number of conversations this week, and they've been really, really supportive in what we're doing and how we're progressing.
A lot to look forward to. Gentlemen, thank you very much indeed. Nadeem Raza, Chief Executive, and Bill Wynn, the Chief Financial Officer of Microlise Group. Thank you very much indeed.
Sarah, thank you.
Thank you, Sarah.